So I want to welcome everyone to our April Provider Forum. Well, we have Victor Tang is going to talk about the insurance marketplace. He is the Senior Vice President at Marsh McLennan Agency and has a proven track record in leadership, benefits, and recruitment in health and benefits industry. So we are delighted to have Victor, and I'm going to turn it over to him. So you can share your screen whenever you get a chance, Victor.
Perfect. Thanks, Dina. Appreciate it and appreciate you guys having us. And I'll share my screen here momentarily. But yeah, would love to thank everybody for being here today. And purpose of our presentation today is just to kind of give you all in the industries that you guys represent an overall update on the not only insurance marketplace and the property, work comp, liability, and auto on the commercial side, but also on the health insurance and benefit side. But there's a lot of crazy things happening here right now. Presentation should take maybe about 35 minutes, but please feel free to, ask questions in the chat box, or I'll also stick around towards after our presentation to help answer any questions as well. So cool. With that being said, I'll share my screen. Perfect. Can everyone see this okay?
Yes.
Okay, perfect. Yep. So just want to briefly talk about our firm. Marsh McLennan represents the largest global insurance broker actually in the world, which is always cool to say. And we are in 130 countries, 81,000 colleagues globally, and we're a Fortune 250 company. I work for Marsh McLennan Agency, who represents what I call the middle market sector for employers on their overall insurance program. So think of it anywhere between one employee to maybe 1,000. That's kind of where we sit as far as our clients. So in that middle market sector. So the purpose of today is just to kind of give you an update, as I mentioned, on just the overall insurance marketplace. Where are claims coming from? How do I improve your overall risk profile? How can you kind of incorporate your health insurance and benefits program to help manage, the generations of different workers, Gen Zs, millennials, boomers, and how do you recruit employees and utilize your employee health and benefits program to be a differentiator among your competition in the war for talent. So to give you a background, what I want to first start with is the business insurance side, right? Think of this as your property insurance, your liability insurance, your auto, your management, even cyber, workers' compensation, and what we're seeing in the overall workplace. I'll speak for Florida, but I know we have folks here that have national companies that are all across the country. Specifically in Florida, we are seeing, actually, I'll start with the first one, which is property. I know we saw 2 storms yesterday, and I'll speak a little, last year, and I'll speak a little bit more into that in this presentation, is that we're actually seeing property insurance premiums decrease this year, surprisingly, after 2 storms last year. And I think a big reason to that is reinsurance and insurance companies have in the past few years budgeted and maybe over budgeted, for lack of a term, for that. And with that being said, I think everyone's going to see, including your individual homeowners policies, some relief this year on your renewals. But I will say the liability side, and specific to abuse and molestation, professional liability, errors and omissions, it's still very challenged. Specifically our ARCs and our clients in the foster care, development of disabilities, and just that work with children, is still a challenge on those lines. And also auto. I mean, specifically if you're in Florida, auto insurance is still a very big challenge for our clients. Plaintiff attorneys are attacking the industry very hard, right? Especially if you have like an umbrella policy. And until we see some state reform there, it's going to be a big challenge to having attorneys involved. And you may have seen this on your side. I'm happy to talk about it in more detail. But we're seeing claims happen, attorneys being involved, and then subpoenaing your insurance policies. Okay, you have a $1 million limit. Guess what we're suing you for? $1 million, right? So we're seeing a lot of that. We're still seeing an uptick in mergers and acquisitions. And as these mergers and acquisitions happen, for my nonprofits or my for-profit clients, the more complex an organization is, the more difficult it is to wrap around, building an insurance program that's affordable around that. But we can absolutely help in doing so. This is always a good chart to see as far as what we see for insurance premiums for every quarter. As you can see, ending it with COVID and 2020, 2021, 2022, we're actually seeing insurance pricing drop each quarter. A lot of this has to do with property. We're seeing property go down, which is great news for our folks here in Florida. But the overall global index came despite an elevated risk landscape, with 2024 insured natural catastrophe losses totaling almost 130 billion. A lot of that came from property, the fifth most consecutive year. So I think the question is, okay, we've had 130 billion in catastrophic losses last year, which is a lot, and insurance premiums are going down. And I think a lot of that has to do with over budgeting by these insurance companies over the past few years. So some good news and relief there, but we're also here to tell you kind of what you need to do to make sure you're seeing these decreases and potential just rate holds in your insurance and upcoming renewals there. Okay, so first I want to talk about management and executive liability. So think of a management and executive liability like your directors and officers insurance, your employment practices liability, your professional liability, what I call just the executive lines of coverages. Same thing. We're seeing 3% decreases for Q3 in 2024. And we're seeing a lot of decreases projected for the rest of the year as well. So great news there. I'm ordering good news today. So that's good. Cyber is one of those lines of coverages that I would caution everyone to really take a deep dive in your organizations. We have some pretty good resources to help you with this, but you're seeing that in quarter 3 of 2024, towards the tail end of last year. Let's just say your system was able to get hacked, because that does happen nowadays. I mean, you may have heard about Disney being hacked, MGM being hacked, and you may have heard of CrowdStrike last year with kind of basically taking down a lot of the flights and causing some troubles there. But the percentage of time a ransom is being paid is about 28.6% of the time, which is crazy, right? Just as an organization, hopefully, you're bolstering your IT programs and your IT teams to basically be able to do mock trials to make sure that your systems do not get breached. But if they do, we're seeing about 30% of the time these hackers are demanding a ransom to give you back either data or your system, or a combination of both. And that could be problematic there. So cyber insurance is something that we absolutely recommend. And we can definitely help as far as determining the right type of limits and the right types of deductibles you should be taking there, depending on what kind of data you're holding, and how much of your business is contingent upon your essentially digital operations. So a medium, this is always so crazy, right, for me to see the average ransom that these hackers are demanding is continuing to go up. With the end of 2024, we're seeing almost $700,000 of cyber ransom demanded, and the actual payout, which if you're working with a cyber insurance carrier, on average doubled in Q3 2024 last year, from about $125,000 to $300,000. So we are seeing that if your system gets hacked, if there's a ransom required and there is a ransom payout, about $300,000. And what they'll do is they'll either be able to get this in cryptocurrency or just a direct payment to an overseas account. So there are definitely resources out there. There's also third-party companies that we work with out there that can really help bolster your cyber security to make sure that these type of things do not happen. But this is something that just through the years, it definitely has its ups and downs for what we're seeing with claims, but we definitely do see a few of these kind of claims every year, unfortunately. I'll zoom in because there's a lot going on here. And I think just as someone like me who lives in Florida, I always think of just hurricanes as our national catastrophe events. And obviously we had Hurricane Milton last year, we had Debbie, but there's also other national weather, climate, disaster events that happen throughout the country. Obviously, we know about the California wildfires and what we saw there, but what the NOAA discloses every year is how many billion-dollar weather and climate disasters happen in 2024, and you see all of them here right now. A lot of them are winter storms. There's hailstorms. There's a lot of hurricanes that you can kind of see in these purple here, and a lot of severe weather events. There's also hail events, fire events, and tornado events as well. And all of these contributed to $27 billion weather and climate disasters and what we're seeing. But kind of like what I mentioned at the beginning of this presentation, we're seeing an actually decrease in property this year because of the overfunding that the reinsurers were accounting for in the past few years with insurance premiums. So some overall good news here. But it's amazing to me that every time I look at this, every year, we always have the consistency of hurricanes for the most part, at least in the Southeast, but there's a lot of new ones that pop up as well, specifically to the drought and heat wave actually last year in Oklahoma. So some things to keep in mind there. Auto, fun thing here. We're continuing. Auto is one of the lines of coverages on the insurance piece, specifically in Florida, that we're seeing increases. So average rate increases are 5 to 15% for most businesses, especially with heavy trucks or just heavy or big vehicles. A lot of things our clients are doing is looking at their overall fleet and either one, getting rid of vehicles that they don't utilize as often. They're really doubling down on driver safety programs and training for their team, MVR recording, increasing their age for average drivers, and limiting how you transport clients if you do that, whether it's children or patients, and how to do that. And then a lot of clients, just to add some efficient ways to help manage your program too, are increasing deductibles on vehicles that maybe don't have as much activity or two are not being driven, right? And also to add to that, older vehicles as well, right? If you have vehicles that are 10, 12, 15 years old, which we see all the time, it may not make sense to carry insurance on the comp and collision to where something were to happen to the vehicle to be damaged for you to cover it. But we obviously recommend carrying the liability insurance just in case, God forbid, something happened and you hurt someone or someone was hurt. But definitely check your vehicle and fleet policies and let us know if we can help there as far as giving guidance. But there's definitely some unique ways to help mitigate this on the auto side as well. So adding to this and kind of giving a brief summary of what we're seeing in this overall marketplace is as we, every day we're working with our clients, nonprofit, for-profit clients, is how do you increase your risk profile? This is a very important kind of page here is allow us to tell your story, right? A lot of times, let's just say, work with a lot of ARCs, but a lot of ARCs do different things. Or, we work with a lot of foster care. And a lot of our foster care clients do something different. So when you receive those fund insurance applications, make sure that you're telling your story. And your agent is also telling your story of, hey, here's how we're different. And here's all the things that we're investing in from a safety perspective, from an educational perspective, from a risk management and loss control perspective. And that always helps. That can never hurt, especially with how insurance premiums and how they're making up, behind payroll. Insurance is probably your second highest expense as an organization. Allowing us to tell your story and first doing a risk management audit and management summary report of saying, hey, here's all the insurance we have. Here's what we do. Here's some of the gaps and coverages that we have. And a lot of times you'd be surprised that the insurance company doesn't know that, hey, you have a building here, or you operate here, or you don't have this many vehicles, or you're no longer working with this client. And that could be the main difference between, an increase or a decrease when it comes to insurance. I always mention this, have face-to-face meetings with your insurance carriers, and specifically the large carriers that represent a lot of your premium, and being able to tell that story, that allows your agent, specifically us, to go to bat for you and know that, hey, this client's invested. They want to meet with you. They want to meet with the underwriter. They want to understand, how to help effectively manage your operations. A detailed narrative of your operations is important as well. I mentioned that. Make sure that we know what you do, right? And all your operations and how you guys are effectively managing those pieces. And then we work with a lot of outside vendors as well. And one of them is called Presidium. Presidium, in addition to what we do for our clients on top of training, safety training, law control training, auto training, fleet training, working with a Presidium is a very detailed safety recognition program that allows an organization to be a Presidium organization. And a lot of insurance carriers recognize Presidium organizations because they know that they are dedicated to safety and mitigating claims. And a lot of times your insurance carrier, you can negotiate to help pay for some of these things, whether it's a cybersecurity outside firm, whether it's a Presidium, whether it's a safety training program. You can negotiate this type of pricing or even reimbursement pricing with your insurance companies to help pay for these things, because they know that, hey, if we pay for this safety program for our client, at least pay for some of it, that will hopefully equal to lesser losses, lesser claims, and also help manage the cost of something like that if you were to do this outside. I'm going to stop there. Does anyone, before we go into the health insurance and benefits side, does anyone have any questions at all, or anything that we wanted to kind of talk more in detail with? Happy to answer any questions.
I don't have any in the chat, but that doesn't mean someone can't shout out a question.
Okay, perfect. Quick and easy. Don't be shy. Cool. So I'll pivot over to the health and benefits side. So very different, right? The property work comp liability auto side represents what I like to call I don't want to say black and white, but represents just the risk side of an organization. I wanted to pivot over to the benefits health insurance side as well. And there's a lot of things going on here as well, as you've seen. Before we kind of go into the presentation, I'm sure everyone has their hands or is a consumer of overall health insurance and the benefits that you receive from your organization. We are seeing a lot of changes here from when I started doing this, almost 10 years ago. Now, there's only 4 major carriers now, as you've seen. It's Aetna, Cigna, United Healthcare, and Blue Cross and Blue Shield. And if you're in Florida, it's Florida Blue, which is the same thing. We're seeing pharmacy costs significantly increase. They're saying about 25 cents of every health insurance premium dollar you spend is going towards pharmacy now. You may see all the commercials on TV, the Ozempics, the Mounjaros, all the GLP-1 drugs. And we're seeing more and more multi-million-dollar drugs be approved by the FDA. So this is something that I know for a fact behind payroll is probably your second highest expense for benefits as an organization. And we're going to talk about kind of how we can help with that today. So the one thing that we do every year, Marsh, is we take a look and we poll and survey all of our clients across the country, specifically their HR practitioners, specifically their executive teams. And we develop 4 key themes of what we're seeing for 2025. And I alluded to one of them already with the RX, but the first one is bridging the generational gap. What we're seeing now is millennials and Gen Zs are now representing the majority of your workforce, right? And boomers are returning to the workplace just to continue to change workplace demographics for years to come. And as age gaps of 40 to 50 years between colleagues become more common, organizations must help employees find common ground and share their experience-specific insights and skills with one another. AI is something I can tell you that I need to learn more about, and I think all of us do in this realm. It's becoming more and more complex and also more and more efficient of how it can help us. So what are you doing as an organization for your team? Speaking about training of how to train your employees and how to get in front of AI, but also manage it and effectively utilize it. And I mentioned this too with pharmacy, right? Pharmacy is a very, very dirty game from what I like to mention, in a way that I love the development. We love the research behind it. We love these unique drugs that are coming into the marketplace and really saving lives, if you will. But what I mentioned when it how it's dirty is it's very expensive. And it's also very hard to manage as an employer, the cost of pharmaceuticals nowadays. And tying into the pharmacy is again the ever rise in healthcare costs, right? Healthcare costs outpacing inflation right now. And how we're helping clients manage that and making sure they're picking the right benefit programs, the right benefit plans for their staff members, to help mitigate the cost and the increased cost there. Our first step for our benefits clients is very, very similar to the property and casualty business insurance side that we just spoke about, is assessing your current program, right? What type of benefits are you offering? What carrier are you with? What type of medical plans are you offering, right? And why do you offer these type of plans, right? When's the last time you've done an employee benefits survey to survey your employees of, hey, what unique benefits or what new benefits out there that we can offer to help be competitive? And also benchmarking your plan against your peers, right? That we can help do that. Or how much am I paying? How much am our employees paying per paycheck for their health insurance? And my competitors, how much are they charging? To make sure that you guys are within industry benchmark there. And I always say this too, developing a 3-year strategic plan is important. Benefits you cannot change or make very, very big strides in one renewal or one open enrollment. It takes time to move towards a target without really ripping the Band-Aid off and changing a lot of your benefits program. Leadership commitment. This is something that we talk about of what does your leadership want as far as their benefits, right? Most of the time, our clients are saying, hey, I want to effectively offer benefits to my staff and then be happy about what they're offering. However, I also want to manage the cost of it. And getting that leadership commitment there. One term that you're hearing a lot for benefits right now is total wellness. Not, and that when you hear the term wellness, you're thinking, oh, wellness programs, or biometric screenings, or walking challenges, or weight loss competitions. But a lot of this is the total health and wellness pieces, financial wellness, mental health wellness, making sure that we're giving our employees the type of tools they need to effectively engage them into the overall workplace, and then reviewing and measuring your effectiveness, right? One thing we do with our clients is after every open enrollment, after every renewal, is like, hey, how do we do? How was the messaging, right? Because what you're seeing now, how this ties together is there's different types of generations in your overall workforce, and Gen Zs and Boomers want benefits communicated very differently, right? And that's why having a survey, measuring your effectiveness, and really communicating benefits the way your employees want them is important. Cost saving strategies and how we are effectively helping clients save money on their overall benefits program is most of our clients, I would say, at least start fully insured. And fully insured, think of it kind of like as your Netflix bill. You pay Netflix, you watch as much as you possibly want, and they charge you the same amount, and every year you'll probably get maybe a couple dollars of an increase. Sometimes as your company grows or as your workforce changes, as your financials change, and also as your claims change, either a self-funding or partially self-funded program can make sense for you. And think of a self-funded program or a partially self-funded program like a electricity bill, right? You pay as much as you utilize, whereas Netflix you pay and you can utilize as much as you want, as little as you want. It's still going to be you're still going to have a pricing there. So that's something we look at for clients as well. I mentioned this as pharmacy and pharmacy contract reviews. Sometimes it may make sense to be with United Healthcare for your medical, but it may make sense to be with Aetna and CVS for your pharmacy, right? And carving those things out. Network analysis. This is something we do for clients as well, to where, okay, all of my folks are going to ABC hospital and then so-and-so doctor, right? And what we're seeing is that a lot of clients, specifically clients that have operations in certain types of the cities or counties, that maybe St. Joe's Hospital has the best possible contract with Aetna, and Aetna is who we want to go with because that's where all of our employees are going with anyways, right? So that's something we look at. And building a wellness culture, we can talk for another hour about this one, of what wellness strategies you as employers are doing to help build effectiveness and also allowing your employees to really find the better versions of themselves from a wellness perspective, which hopefully will ultimately lower claims. Aggressive carrier marketing. I mentioned this at the very start of our presentation. There's really only 4 insurance carriers now on the health side: Aetna, Cigna, United, and the Blues. So making sure you're aggressive, you start early, allows your broker more time to help negotiate, and make sure you're getting the best pricing for the best plans you offer. And then on the last 2 is just HR consulting and benefits technology. The more and more, as the years go by, benefits technology is a really big part in what we do now, whereas 10 years ago it wasn't. And making sure you have an efficient program there. I do like to show this. I mentioned the 4 pillars, or the 4 what we're seeing this year on the employee health and benefits side. But for 2024, because this report's kind of retro dated to back here, we're still kind of through 2025. The average individual cost per paycheck, not per paycheck, per month, for a traditional PPO plan in Florida is about $153. So when you receive those benefit renewals, those benefit brochures that you have and are communicating with your employees, make sure you're benchmarking to what the state of Florida on average is charging. I did want to include, because I know we have a lot of healthcare organizations here and also nonprofits, of what we're seeing for health insurance costing per month for employees. And obviously this differs by what type of plan you offer, whether you have a PPO plan. Most of our clients and most employers have a combination of all of these, right? Whether it's a PPO plan, an HSA plan, which is short for high deductible health plan, a health reimbursement arrangement, which is an HRA, an HMO is also still common, and also your dental plans. These are the kind of per paychecks, I keep saying per paycheck, per month contributions that employees are paying if you're single. So good data there for you to benchmark against what you currently have today. This is actually, the benefit survey is actually 60 pages long, but I didn't want to put everyone to sleep today. So we only included a couple pages from our survey, but we're happy to show it to you on a separate call. This is one of my favorite pages in the survey of what type of voluntary insurance benefits are being offered by organizations out there. And most of the time, these type of benefits are free to you as an organization and can be offered on a voluntary basis for the employees and members to pay for, as long as it meets participation requirements. And obviously the first few that you see on here that's most common is what I call the AFLAC products, like accident, cancer, critical illness, hospital indemnity, and also sometimes offer the individual disability and universal life insurance as well. So you're seeing that that's pretty much a staple a lot of times in organizations of offering those type of plans. Long-term care right here is continuing to be a very big proponent as folks are getting older, especially our boomers, of having some sort of product to offer, for you to have care as you get a bit older, that's portable. Once you retire from the organization, you can carry it with you. And one benefit that we're not seeing on here that I think is gonna pop up here very soon is GLP-1 drugs, so Ozempics and Mounjaros. A lot of our clients are getting calls from potential new hires saying, hey, do you guys cover Ozempic? Do you guys cover Mounjaro as part of your plan? And most of the time, it needs to be medically necessary for the health insurance plan to cover, and they make you kind of go through Congress to get it approved. But as an organization, sometimes, depending on your carrier, you can cover this without it being medically necessary and used for more of a cosmetic reason, if you will. So happy to talk through that. And then this, about 5 years ago, wasn't as high, but fertility and IVF benefits continue to grow of our clients as folks who are waiting a little bit longer in life to have kids or try to have kids, of covering those benefits as well. And I wanted to talk about what we're seeing for clients as well is what we're doing, right? This kind of ties into how we're helping our clients. Is we're looking at their overall benefits program and helping them not only continue to offer rich benefits, but also save money. And I kind of include a couple case scenarios here of what we're doing with clients. There's a lot of different ways, right? And everyone's benefits program is a little bit different. But for some of our specific clients, what we're doing is that it's kind of what I alluded to. It's like, hey, it may not make sense to be with Cigna on the pharmacy, but it makes sense to be with UHC, carving out pharmacy for some of our clients. A lot of our clients, what we're doing too is that we're seeing that they're not offering the right type of plans. I met with a client yesterday, and they offer 2 traditional PPO plans. So think of PPO plans as the most expensive type of plan you can offer, right? Co-pays, very rich, very low deductibles, and a large percentage of their staff are Gen Zs. Think of folks, you know, in their late 20s, early 30s that aren't utilizing the doctor, right? They're not going to the doctor as much. They only utilize health insurance to get their checkups, their blood works, their women exams. So what we did was pair their 2 PPO plans with an HSA plan, and they utilized some of that savings to put towards a health savings accounts for their members. And not only did they save money doing that, they were able to offer employee only at 100% covered for their staff, which is a huge HR win for their team. And they were also able to save money, but also they were able to create a new plan and really effectively offer the right type of plans for the demographics. That is the number one thing I see when we review benefit programs is you're not offering the right type of plans for who you have. The first question I ask is, hey, why do you offer these type of medical plans? And the first question you usually get is, oh, I don't know, it's always just been like that, right? So reviewing it and making sure you're offering the right type of plans is very important. Besides that is all I had. The one thing I also like to mention too is please feel free to connect on LinkedIn. I'm actually doing a raffle of a $100 gas gift card for anyone that adds me on LinkedIn, and we'll pull that randomly. You can just scan this QR code here to connect on LinkedIn, and it should be able to pop up here with my link. And but I'm gonna stop there. Did anyone have any questions? I know that was a lot of information.
We can open it up for questions if anyone has any. I know we're going to be sending a copy of this presentation out to all attendees. But if you have something, you can put it in the chat or just unmute. I'm not seeing anything in the chat right now. So maybe Victor, you can explain or talk about how providers may use some of this insurance. Is there different rates for business than personal?
Yeah, there's definitely different rates for personal, Dina, versus business. And I think every case is very different. But the first thing I would ask is just have us review what you currently have and just do kind of a free assessment of what we would do here, and almost treat you as if you're not a client. I know there's some clients on the call. Just kind of treat you as if you're a client, like, hey, here's what we would do and here's what we would recommend. Specifically for our providers. Yeah.
Great. Okay. Well, like I said, we're going to send this out and we'll put your contact information if people have specific questions. But we thank you so much for taking time this morning.
No problem. Thanks, everybody. And we're happy to support the ARC of Florida. So thanks for having us.
Thank you.